Good evening, guys, and welcome to the mid-market review. Today, I'm basically going to be going over some currency pairs that I was looking at for the market outlook, seeing how they've done throughout the week, seeing what price action has basically occurred, how we could have capitalized on certain opportunities, how we could have refined our entries, and ideally looking at future positions to end the week comfortably. So, without further ado, let's get into this sort of market outlook. As we all know, this week the price action hasn't been the best, as we've seen quite choppy sort of ranges, and we've been in quite contraction ranges. And what happens in these sort of circumstances is at the beginning of the week, when we have these sort of consolidation ranges, is basically signifying from an institutional point of view that orders are being built up. We see that sort of accumulation, and then obviously the manipulation to take out those accumulative orders. And upon the manipulation gained from the bank's algorithm perspective, we then see the favorable distribution followed. But right now we are in quite choppy market, so this is going to be a quick market overview, but nevertheless I am going to go into detail on certain things. Just starting off with the the Euro USD. We'll just look at the dollar in just a second, but something that caught my eye on the daily time frame was, if we actually just look at, obviously I've analyzed this prior price action, but just to give you a more refined viewpoint and a current viewpoint on what I'm looking at. Again, we had that mitigation of that previous daily sponsor candle, rebalance of inefficient pricing. Upon a rebalance, we've come into a discount pricing also. So banks have obviously bought at the best possible price, and in doing so, they've mitigated with a previous sell to buy candle. But nevertheless, upon that bullish reaction, we had that sweep of that prior engineered high there. So again, referring back to our sort of technical Tuesday video, this is our sort of region to be looking for them, not big shorts, but ideally them shorts to see lower pricing. That's why I've got a strict bias on EU shorts, but nevertheless, we could ideally see higher prices from a daily structural point of view. And the reason I say that is because, from a structural point of view, we are making now higher highs, higher lows, and arguably looks like we want to make a new higher high. But if we actually look at this red box here, this is a strong retail resistance. So again, we have resistance here. Upon reaching that level, again, we have a resistance there. We see a small sell-off and a resistance here. So again, from a retail's perspective, there is a huge amount of stop losses present above this area here, which basically leads us to that sort of institutional candle level there, and so on. But what I would favor is at least a mitigation of this sort of candle here. To a certain extent, we got that mitigation with this wick here, but I'd favor more of a mitigation to the mean threshold of that candle. Just gonna refine these colors a bit more, so that's a bit better. So yeah, I'd like to see one more push down within this region here, and then ultimately see that bullish move up, and yeah, look to capitalize both ways. Now scaling down a time frame into the 4-hour time frame. So upon the 4-hour time frame, again, this was my market outlook markings, and if we just sort of look at price as it is right now and what it's actually done throughout this whole week, again, we were in this contraction range here, literally price moving sideways, ranging from about, not even that, so about 30 to 40 pips at max. And this is what I mean. We had that contraction phase there. Arguably, it looks like we've had that manipulation and maybe that distribution to higher prices now. But if we do see higher prices, there are some sort of things I'm looking to capitalize on accordingly. But yeah, nevertheless, I will go into depth on the short trade that we took. But just looking at sort of structural point of views now, we are making higher highs, higher lows, higher highs. Arguably, this looks like the new higher low, and a mitigation of the sponsor candle from a 4-hour time frame to initially make a new higher high. Just dropping down a time frame to the 1-hour time frame, and just hiding these annotations here, so we can see sort of the structural point of views a bit more clearly. Again, marked out these light blue circles here to mark out sort of structure on the higher time frames. And I did have a buy limit here, just missed it by 10 pips or so, which is quite painful. But again, 10 pips is quite a bit for a limit order, especially considering spreads, etc. But there's always sort of something to learn from this, and the lesson there is sort of look at the lower time frames for the ultimate refinement, as the whole institutional candle was initially these two down candles. Sorry, the whole sponsor candle was initially these last two candles before that up move that ideally took out this prior engineered high here, etc. So it was these two candles, these two bearish candles, that was the catalyst towards higher prices and ideally swept this trend line liquidity as well. So we had to factor in that whole candle there, and we literally got a mitigation upon the mean threshold of that 5-minute or 15-minute candle, whatever time frame that was. But yeah, upon a mitigation of that, we look like we've then seen higher prices. So anyone that's sort of in this trade now, we are stopped at break even. And I will be still looking for opportunities accordingly. But if I just remove this sort of 1 hour time frame now and just go straight onto the 5-minute time frame, just to give you a more refined viewpoint on what I was looking for on our sort of short bias that was taken today. So again, a bit of a choppy trade, but nevertheless we did have that dramatic drop in the sense we were straight away in profit. But just looking at sort of price action on a 5-minute time frame, again we have the relative equal highs there, and arguably had these relative equal lows here, sell side liquidity. But I was more so worried about these relative equal highs, as upon that sweep I then wanted to see a break in market structure. Upon that break in market structure, taking out these relative equal lows here, I wanted to see that retracement up back to a premium, and then we could have sort of scaled into a even smaller time frame, a 1-minute time frame. And one thing I want to sort of show you here, and a lot of people don't know this, but if we see this sort of bullish momentum upon trading back to a premium pricing on a smaller time frame, it basically signifies healthy bullish institutional order flow. But what's also signifying is every single one of these prior engineered lows here are going to be valid liquidity points, so we can actually favor a rapid sell-off to take out these lows here. As you know, just look at these lows here: 1, 2, 3, 4, 5, 6, 7, 8, 9, arguably 10 lows formed within the span of under 2 hours. So again, a lot of liquidity has been built just within this range here, and we know stops occur just below relative equal lows. So again, we have equal lows there and prior engineered swing lows and highs. So again, that's why we saw this sort of impulsive momentum down, as we knew that there was a lot of sell side liquidity present over here. But not only that, there was this engineered low here and these relative equal lows slash prior higher lows. So yeah, that's always a good thing. You want to monitor on a smaller time frame. How are we actually reaching the premium zone? Is it impulsively? Is it choppy? And upon that, you can sort of counteract a Pacific bias. Upon getting to our again, this was the sort of area of interest. This whole region here, as these two highs. Well, ideally, the highs that swept these relative equal highs and took liquidity ultimately gave us that sell-off to trade back into a premium. Then I'll be sort of looking at this area here. So again, we have that sell-off here, and this is the last up candle before that down move. And upon that, we then have that mitigation of that candle there, and then ultimately have another sell-off. And then I'll be ideally scaling in, saying, okay, where is our last up candle before the down move? It is this candle here. But one thing I sort of also want to illustrate as well is the raids, in my opinion, regardless if it's sort of a wick or an actual body, because if you scale into a 30-second or even a 15-second time frame, we can actually see just within this raid here it is a full-bodied candle, just like any other wick. But nevertheless, this is what I favor as a official sponsor candle, in the sense that banks have actually sponsored this move, in the sense that they are putting money on the line for lower prices on Euro USD upon a raid of this liquidity, a mitigation of this candle, and arguably a rebalance of this inefficient pricing here. So there is things happening simultaneously within a short time span, and upon that, obviously, that mitigation, rebalance of price, and that raid of that prior high. It all happened just within that candle there. So again, that is a strong area of interest of mine, and especially now we've sort of had witnessed two sell-offs, and arguably had this structural pullback. Structural meaning because we were creating higher highs, higher lows. But again, this is also considered as a multiplex pullback. So if you actually just look at the structural PDF that's in the Discord, you understand what I mean by a multiplex pullback. It's when the overall time frame or the overall trend is bearish, but we actually form a short-term bullish move up. But nevertheless, we did have that mitigation, and upon that mitigation, we then had that sell-off. And ideally, you could have got short within this candle here, possibly at the body or even over here. Stops over here would have been safe. But again, our entry, I believe, just nearly hit stop, missed it by a pip, but nevertheless, it did move in our favored bias. And another thing I sort of want to illustrate is upon taking out relative equal lows, straight away 20-30% of your position should come off, especially if you're trading FTMO. And the reason I say especially if you're trading FTMO is because you're trading on behalf of a prop firm. That account is not really looked at upon compounding or retaining profit or banking. The only way you're putting bread on the table is if you're sort of taking partial profits, and that's the way you got to look at these prop firms as an overall, in the sense that that's not your personal account. If it's your personal account, I can understand why you would want to compound and sort of leave as much as you can in the markets to a certain extent. But with FTMO, you've got a week, and you've got to sort of try and not trade as much as you can, but try and bag the most pips rather in that week, so you can sort of withdraw at the end of the month, basically. But yeah, partials is a key thing when trading from a prop firm perspective. But if you were trading this setup on your personal account, I'd say be a bit more risk adverse, in the sense that be patient when you take partials, as you ideally want to swing the most out of your position. And I was expecting quite a bearish sentiment for Euro USD, especially due to the fact we do have a continuous amount of areas of interest to be monitoring, both on the higher time frames and the lower time frames. But nevertheless, if I was actually looking to get into a longer, again, just scaling back into the 5-minute time frame, just looking at sort of what was the catalyst towards this bullish momentum here. Again, we had that lower low, lower high, lower low, arguably that new lower high. If we actually just scale into a 1-minute time frame, just to refine this a bit more, and just look at what happened within structure here. Again, we have this sort of impulsive bullish move, and the reason I'm saying this is impulsive compared to this sort of prior price action here is, notice we were sort of in, this wasn't really a contraction range, but we were in a contraction range here, and after contraction ranges, what do we expect? Expansion. So upon that contraction, we have that expansion move there, expansion move to specifically where to mitigate with this 5-minute area of interest, and that is the last 3 down candles before the up move. And I believe it's more easier to see on a 15-minute time frame. So again, yeah, on a 15-minute time frame, this is in fact the last down candle before the up move. So we could even refine it to this sort of candle here, and price literally mitigated with that candle to the pip, and ultimately seen higher prices ever since. But just scaling back into the 1 minute time frame, just looking at what price is offering right now. So upon a mitigation of that candle there, we've ultimately seen a break in market structure from this structural high, and ultimately these prior engineered lower highs here. So again, this was the last down candle before the up move that ideally catalyst that whole move higher on Euro USD. We have also left this inefficient pricing here that I'd like to see rebalanced, and also we've got this institutional candle, which to me this is mitigated now upon that last down candle before that move, but it has formed a sponsor candle there as well. So I'll be monitoring how price reacts tomorrow London. I believe tomorrow London will be quite interesting due to the fact we've seen volatility kick in today on many pairs, and I believe during today's Asia maybe more orders are being built up, and then London, we can possibly catch the high of the day / low of the day on Pacific currency pairs, depending on the bias, and then react accordingly when price shows us what we want to see. But right now, what I'd favor is a sweep of this high here. The reason why is because right now we have formed relative equal highs here, so possible sell-off to this sort of sponsor candle during Asia, and upon that sell-off, maybe we look to raid those equal highs. Then ultimately I want to see some sort of consolidation / contraction range, a raid of those highs, a clean raid, and then ultimately a break in market structure. I want to see a break in market structure on 2 structural lows. Upon that structural low broken, then I'll see wait for mitigation, ultimately catch that justification entry there. If you're a bit more risk adverse, you can maybe even catch an institutional sort of entry there and then look to sell off. And the reason I would consider this sort of price region an institutional entry here, again, there's 2 ways of sort of looking at it. We have a raid of this prior engineered high here. Upon that raid, this would be the last down candle before that move, which makes it a good institutional candle to sell off. Ideally, we want that to be sort of in a premium pricing as well. That would be our best bet. We could also consider this as an institutional candle as well. But yeah, sometimes they give false moves upon a raid as the real raid, as we saw on Euro USD in this sort of example here, is the candle with the wick. So I'd be looking to sort of trade the candle with the wick upon that raid there, ultimate sell-off. And if we do trade back into a premium, I'll be looking to take an entry upon that institutional candle. But yeah, that's Euro USD. Looking at GBP USD now, just scaling into the 4-hour time frame. So what am I looking at on GBP USD? Again, still monitoring our areas of interest, as I do think we are going to have a sell-off, quite a deep sell-off. Again, the market has shown its hand to a certain extent with this massive bearish candle with minimum wick on each side. And again, those are the candles that we favor. And it does look like we are pulling back now. What I'd be assuming the sort of bank algorithm is doing is pulling back to attract more retail. Obviously buy, and this sort of engineered high has been set there for a reason, in my opinion. Just getting into the hourly time frame so you can see this a bit more better. We had a sweep of this prior high here. Upon that sweep, ultimately sold off, mitigated with this sponsor candle, I believe, on a 4-hour time frame. So again, the last down candle before that impulsive move up upon a mitigation. I do think we're going to have one more push higher, possibly take out this prior engineered high here and possibly this prior engineered high here. Upon that sweep of liquidity, I'll be seeing how price reacts within this area here on a 1-minute time frame, and I would look to take a justification entry, possible shorts back to our areas of interest. Again, price just missed our area of interest here at the beginning of the week. We could have actually capitalized on a favorable long opportunity, as I am trying to stack my GBP sort of longs. But again, that would have been a 260 pip move. But again, you could just see how fast GU moves, and upon catching that sell-off, arguably in London when it makes the high of the day, and ultimately sort of holding till the rest of the week, and we could get a bearish weekly closure that could give us over 400 pips coming towards the end of the week. So yeah, that's something I'm monitoring, and this area here is ideally an area of interest where I would like to go long. And the reason why I say that is because if I just scale into the daily time frame and just remove the 4-hour annotations for just a second, you can see on the daily time frame, should be daily sponsor candle. Just give me 2 seconds. So yeah, what I'd favor on the daily time frame, again, we have this long wicked body here. So again, this is a good indication of price showing exhaustion, meaning that it's failing to sort of see higher prices. So I do expect a retracement upon that level here. And again, this is our premium level. Premium, we do look for sells, and our discount level, we do look for possible longs / buys. So I'll be awaiting a sell-off small pullback, a sell-off into our daily sponsor candle here, the last down candle before that move. And if I actually sort of illustrate this on a 4-hour time frame, this actually matches up quite nicely with our 4-hour area of interest, which is a more refined viewpoint. So yeah, I'll be waiting for price to come within this region here, more specifically this last down candle before the move rebalance with this pricing, this inefficient pricing here slash imbalanced pricing. Ultimately, I'll be waiting for a sort of justification, no, not justification, entry, sorry, it's correct, a risk entry. Literally upon price reaching there, I'll be waiting for a small push up on a smaller time frame, push back down, and then look to go long, and then yeah, hopefully see higher prices to continue with this whole bullish momentum. And yeah, that's GBP USD. Scaling into GJ now. Again, GJ hasn't really shown us much in the sense, scaling into the sort of 4-hour time frame. Again, there is a lot of areas of interest, and we're waiting for price to sort of give us for possible long opportunities. But again, this was given on the market outlook, and it's important to have these sort of levels mapped up on your chart. And the reason I say that is because let's say we didn't, and we sort of saw this sell-off, arguably broke market structure to a certain extent here, which is really a raid. Ultimately, people are sort of ticking off in their head now, you know, let's look for possible sells upon a pullback, etc. And what does price do? Completely raid that prior high there. Maybe people even trying to short this move here, and then we ultimately get a raid there. So it just looks like every time we have a small sell-off to attract retail to sell, we see that next bullish impulsive move. So the next thing I'm sort of waiting for, both on a 4-hour time frame and arguably an hourly time frame, is this hourly area of interest, this last down candle before that move. But it does allow, we have got a mitigation both of this candle here and this candle here. So my next area of interest would be this candle here, this last down candle before that move. And if I actually just sort of zoom into this price a little bit more, you can see this inefficient price in here, and arguably these relative equal lows here. So we have those relative equal lows that need to be swept, but nevertheless it is a good sort of target to be looking for. Again, now it looks like we are in a contraction range. What I'll be waiting for is probably a sweep of this prior high here, prior high to where, let's just sort of scale out onto the daily time frame just to see what price is sort of showing us. So again, this is my next area of interest. Main area of interest will be this daily sponsor candle here, and ultimately where I think we are going to see some favorable short positions slash short trades shown to us by strong price action. So what I mean by that is, upon reaching this area here, because this is taking price so long, again we have these sort of lower lows, lower highs, and again we have that shift in market structure, again creating higher highs, higher lows, etc. But just look at the time it's sort of taken to reach these sort of areas of interest here. That's nearly 12,000 days, I believe, if I'm seeing that correct. 1,100, sorry, no, I didn't have my glasses on, sorry. It was 1,177 days, but yeah, that is quite a long time. That's nearly 3-4 years to reach to a certain area of interest. So upon reaching that area of interest there, I do think we are going to see a very favorable sell-off. And again, this is similar pricing we saw on a 1-minute time frame on Euro USD. So again, this small contraction pricing, but signifying sort of higher prices to a very minimal or a subtle sense. In the sense, yes, we are making higher prices, but notice we have contraction and then small sort of contraction ranges upon going higher and higher and higher. So again, we could expect sort of this region here to be swept upon reaching those sort of areas of interest there. But nevertheless, upon reaching these areas of interest, everything below that I am bullish. Just waiting for possible pullbacks within these regions here to ideally give us that one last push up to mitigate with this daily sponsor candle here. and this daily sponsor candle here. So yeah, that's something I'm eyeing up on GJ from a macro perspective and a micro perspective. Again, just scaling into these sort of 30-minute time frames, we could look for a possible refinement of these specific areas of interest. So again, these are the sort of levels I'm looking at in alignment with the 4-hour area of interest. I did explain this in the market outlook, but just to go over it again quickly. We have this last down candle before the up move. Again, having relative equal lows here and sort of in alignment with structure, as this is the last structural higher low before that new higher high. And again, we have that sort of similar thing present over here. But it's all about just as soon as when price gets to that area of interest, wait for it to build a story and then ultimately react accordingly. I could sort of level out all of these as sort of sponsor candles within a intraday time frame, but it wouldn't mean nothing in the sense that upon price reaching our area of interest, we still have to wait for a refinement. We still have to wait for possible mitigation, and then upon seeing that, we can then react accordingly. AD USD, just looking at this from a daily time frame. So again, I did expect a sell-off, as I wanted to see a pullback on sort of all currency pairs in order to sort of go longs into our ultimate area of interest, which is this ideally on a daily time frame. It'll be this sort of last up candle before the down move that created this impulsive sell-off. Again, we're seeing continuous amounts of low lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. But upon forming this whole downtrend, what have we created? These sort of liquidity regions and engineered swing highs here, which we are now witnessing getting liquidated upon us talking. So yeah, I do think we are coming into a deep premium pricing. But in saying that, if we actually look at this on a bit more of an in-depth outlook, just looking at the weekly time frame, we do see these sort of relative equal highs present as well, and we see this inefficient pricing here. So again, it is one thing to call it premium pricing, but I personally think we are going to sweep straight through these highs here, as they just look too equal. They look too sensible in my opinion, as the bank's algorithm wouldn't just leave these highs clean here. So I think one more pullback is due. Upon that pullback, it will be the catalyst towards raiding these prior engineered highs, which we could look for possible swing positions, and ultimately rebalancing with this inefficient pricing and this imbalanced pricing here, and ultimately mitigating with this sponsor candle here, the last up candle before that very bearish impulsive move. That was ultimately the catalyst towards all of this sort of lower pricing here, and that raid of that prior engineered low back in 2008. But yeah, not trying to get too ahead, just looking at current price action, just getting back into current price action now, where we could sort of capitalize on possible opportunities. Again, my bias still remains the same. It's still mandatory in the sense that from a 4-hour perspective, there is a lot of liquidity present. Again, we have this trendline liquidity sitting here, trendline liquidity sitting here, and if we actually just look at what the 1-hour time frame has given us this week, just looking at this sort of range here, again, we are in a contraction range, stacked with retail orders. And again, what I'm talking about, previous highs and lows, just looking at this prior low here. Again, we have a sweep of that liquidity. Looking at this prior engineered high here, a impulsive sweep of liquidity. But upon that sweep of liquidity, you'd expect maybe a impulsive move up, but no, nevertheless, we have a raid of that prior high there, a raid of this sell side liquidity here. Upon reaching this level here, a raid of this prior engineered low there. Upon raiding that, again, to a certain extent, we have that impulsive move that takes out this buy side liquidity and this prior engineered high here. But if we look at what price done after, took out this sell side liquidity here and ultimately swept this low here, and upon doing that, it was the catalyst towards this expansion move here. So upon a contraction, we see that expansion, but yeah, I don't think this is enough liquidity swept in the sense that this was just in a contraction range. That's what we normally expect within a contraction range, is this sort of price action to occur. So what I'll be still favoring is a sell-off, and yeah, what I'll be expecting on a intraday time frame is ideally a break below this structural low here. So yes, to a certain extent that is quite far away, but if we actually just scale into a sort of smaller time frame, and I do see a break in market structure arguably with this prior low here, I may look to refine for a possible short, or a sort of justification entry type, and then possibly look to go short around this region here. So upon getting that break in market structure, creating a lower low, lower high, lower low, and arguably having a sponsor candle here, and on an even intraday time frame, for example, if this sort of structure is present on a 15-minute time frame, and we have a 1 minute equal highs here, and this was the raid, I'll definitely be looking to take that short, and ideally trying to sort of not catch the top of the range, but catch the high of London / New York, and then look to swing that down for lower prices for the rest of the week. But yeah, nevertheless, just looking at the sort of premium and discount side of things, again, we are in quite high premium, and there is a lot of discount to be sort of gained. Again, just looking at targets for this for possible longs, we do have this last down candle before the up move that we can expect possible longs from. Again, we have this last down candle before the up move that we can expect longs from, and we have this sort of sell side liquidity that needs to be swept. Now everything here has been mitigated with, and prior lows have been raided, which means the low that raided that prior low is now looked at liquidity region. So yeah, that's what I'm looking at on AUD/USD. Still monitoring these areas of interest I talked about on the weekly market outlook, and yeah, reacting accordingly. Euro JPY, again, I was expecting on this pair a pullback at least to a discount, and then look to go long, but we saw that sort of small pullback, and this is sort of weird price action to a certain extent, as this is a one-to-one replica of what we don't want to see, in the sense this is sort of support turning into resistance, which is kind of weird to a certain extent, but nevertheless we sort of rebalance with this inefficient pricing here to the mean threshold, and upon rebalancing with that inefficient pricing to the mean threshold, we then had that sweep of this prior engineered high here. So yeah, upon sweeping that high, I feel maybe this could be the last sweep of liquidity. We then see that pullback, and then ultimately continue with institutional order flow to bullish prices, but yeah, quite weird price action in the sense that we're not having those sort of deep retracements that we arguably favoring, as you know, there is inefficient price that needs to be rebalanced with upon this level here, and arguably you can consider this as an institutional candle here that still needs to be mitigated with this last up candle before that down move, this candle here, as we took out this prior sell side liquidity here, and ultimately had a mitigation of this sort of candle here / this sort of stop loss hunt here. So yeah, still favoring this sort of region here for possible longs. Again, my take profit has been hit, obviously without no trade being activated, but I'll look to refine this possibly tomorrow, London / New York, as I will update the group on these, on what each currency pairs done overnight, accordingly to yeah, how they've reacted during the Asia session, and possibly London Open, etc. NZD/USD, again, another pair that hasn't really gave us a deep retracement. Yeah, just one that's been again in a contraction range, and then ultimately sort of looked to trade it a lot higher within this last day or so, to be honest. Again, we were in a contraction range, had that arguably that small expansion. The reason I say that is because just before that expansion, we had that 1, 2, 3, 4 sort of doji candles there. I'm just getting into a 1 hour, 1 hour time frame. Again, we could sort of look at this as a 1 hour area of interest to a certain extent. But yeah, upon having that 1 hour area of interest, I wasn't really confident to a certain extent to take a trade off that, because what I like to see with these 1 hour sponsor candles slash areas of interest is inefficient pricing just above that bullish sponsor candle. Also like to see just clean lows, not really a relative equal lows, but prior engineered swing lows is a much more favorable sort of something like this. So we had a sweep of previous liquidity, we have that inefficient pricing there, and ultimately we see impulsive bullish momentum after that breaks structural high. So this is a good area to sort of look for longs, and price just missed it by a pip or two, but nevertheless, what am I looking for next? Again, still sort of scaling for possible longs, and there are countless amount of opportunities that we could sort of get in on NZD/USD. Again, some more favorable than the others. This would be ideally the best entry for myself for longs, but upon price giving us that bias, I will be capitalizing on that specific area of interest. And what I mean by that is, this was our previous area of interest. So again, it was this 4 hour sponsor candle here and this 4 hour sponsor candle here, and that was in alignment with the daily time frame here. So if I just sort of scale back onto the daily time frame, we can see this was the last up candle before that very bearish impulsive move that ideally swept the structural high here. So it may even look like we are coming back into this sort of wick region here. Just mark that candle out, see how price reacts within this region here. So again, prices look like sort of come to that region there. Had a sweep above it, so not really valid to a certain extent, but what I was trying to get at is, upon sweeping a previous sponsor candle, it then becomes an institutional candle. So that basically means there's a lot of buyers present within this level here, so many in fact that they didn't actually mitigate with that specific candle, but that's not to say they're not going to mitigate with that candle as a whole. So upon that sponsor candle being swept, it then turns into an institutional candle. What we could expect is a pullback into this level here, and then ultimately get a mitigation of that sponsor candle there, and then ultimately look for higher prices. I see a few of you spotting these sort of moves that are marked out in the commentaries, etc. So very well done to you, but again, it's all about refining as price gets to these areas of interest. Nothing guaranteed in the market, and as you can see, sort of with this sort of weird price action, some pairs stuck in contraction ranges, other pairs giving us very explosive moves, but not giving us the right entry slash pullbacks in order for us to get in accordingly. But nevertheless, focusing on my buys for the rest of the week, I do expect a small pullback and then ultimately higher prices. But yeah, if we do get a major sell-off that ideally engulfs this last bullish candle, as we can see that is quite an impulsive bullish candle, I will be looking for possible short on NZD/USD. So yeah, it all depends what sort of happens in Asia and the rest of London Open, etc. We could even come down to this level here. Consider this as a possible sponsor candle on a 4 hour time frame. So again, we can look to refine it to this level here, and then look for possible longs and actually use this as our trading range here, from this prior low here to this high here, reaching a discount, and then ultimately see higher prices. As we can just see from this sort of market momentum, price is not really looking to retrace a whole lot, so we can just see a small retracement and then ultimately higher prices. But again, refining as price comes to these sort of regions and reacting accordingly. USD JPY, another trade I had on my list. We had this sort of prior engineered high here and these relative equal highs both being swept now. We've actually mitigated that sponsor candle to the T. Seeing a small sell-off, but not enough for my likings to look for shorts just yet. We may actually see one more push up, sweep this prior high here. Upon sweeping that prior high, then I'll possibly look for shorts upon a stop loss hunt, and then ultimately looking for lower prices to take out these relative equal lows here. and take out this sell side liquidity here. We're just waiting for a bit more on USD JPY, just waiting for price to tell me a bit more, build up a bit more of a story, and yeah, I'll react on USD JPY accordingly. Again, this is in the Asia session. It's a pair that moves a lot in the Asia session, so yeah, it's one to watch for tomorrow. Not necessarily taking the trade during London or New York, more so London close heading towards Asia. So this one can be one of those that pay us while we sleep. So yeah, hopefully we catch on that. And last but not least, gold. Gold's a sort of funny one, but those of you capitalized on, I know some of you capitalized from the short and the long, so very well done to you. That's an impressive sort of move there. Again, capitalized on, you know, a 248 pip move there, and arguably a 211 pip move there. So that's a very favorable return, and especially some of you refined your stops on gold, which is quite hard to do considering how manipulative it is and how often we sort of raid these prior highs and prior lows quite often within these sort of choppy market conditions. So yeah, if you did manage to capitalize on any of those opportunities, well done to you. And I believe we sort of reacted off this sponsor candle here, but that's not to say that I'm not favoring higher prices on gold. I still think maybe this is a mitigation of this sort of sponsor candle region here. Upon a mitigation, we then ultimately see a sell-off that's in alignment with structure, as yes, we are in a contraction range within this sort of area here, but we still making lower lows, lower highs, lower lows. Arguably that new lower high, sort of a small lower high here, lower low. This could be our new lower high in order to create a new lower low, lower high, and come to our area of interest. Just refining this area a bit more to this sort of 70% mark. If I just sort of redraw this fib from this low to this high. So again, that 79% mark is a good region to look for longs, and it's in alignment with that last down candle before that move that hasn't really had any prior mitigation to the right of it. So yeah, that's what I'm looking at on gold, and for the rest of the week, those are the currency pairs I'm looking at, but just waiting for a bit more of a story to build up, as we've seen impulsive moves now, so we know the volatility is there. We just need to see price sort of show us that micro breaks in market structure. We need to see price show us relative equal highs, relative equal lows, a raid of those relative equal highs, relative equal lows, form sponsor candles, and just react accordingly. But yeah, I will update tomorrow in the London session, and yeah, let's end it on a solid week. Once again, thank you very much for watching this video. If you do have any questions on any of the currency pairs I've covered, do drop me a message. If there's any currency pairs that you do want me to cover, drop it in the group or drop me a personal message, and I'll be more than happy to cover that for you. And yeah, hope you all have a good night, good day, good morning, wherever you are in the world, and I'll speak to you in the London room. Thank you and good night.